Hi, this is Rob Warlow from Business Loan Services, and welcome to the Business Finance Bulletin Extra. Kind of an extra little snippet of information to my normal weekly bulletins. And this week I'm glad to be joined by David Lewis from Camrose Consulting. So welcome to the program, David.
Morning, Rob. Thanks for asking me to have a chat.
Yeah, delighted for you to be joining us. So first, David, before we get into the topic that I want to discuss today, perhaps you just give us a bit of a background of what you do and say a little bit about your history.
Right. Okay. I used to be a partner in a firm of accountants. We dealt with some small businesses, but also some fairly chunky businesses. So I've got a sort of a fairly broad perspective of the way different businesses work. Okay. In 2004, I left that and actually started working with a fair-sized business that had been strapped for cash, had various complex loan arrangements, and I was actually tasked with monitoring cash flow, improving cash flow, and just basically seeing how the business was heading. And certainly management information was absolutely critical with that. Since then, I've been working as a consultant, and a lot of it has been mergers and acquisitions related. And I often see situations where deals either fall into difficulty because there's poor information, and sometimes they can fall over because there's poor information. And other things that I sometimes do, I occasionally get called in where there's businesses have suffered because of poor financial management and get called in to resolve issues. So.
Okay.
Yeah,
great. So obviously you've been at the sharp end in terms of the accountancy practice, and now really hands-on support to business owners that probably need, say, a bit more specific advice and guidance, particularly around, as you said, mergers and acquisitions then.
Yeah, absolutely. And it does strike me that there's lots of businesses that could be more profitable, just talking even pre-COVID, if they were actually up their game on their financial management.
Yeah, and that's the point that I wanted to have a chat with you today, was about use of management information. I don't know about you, but certainly over the years when we've been dealing with business owners in raising cash, one of the things there's always a massive information gap is, say, the lack of management information and management accounting. And that's what I want to talk to you about today, because I know you're passionate about businesses having up-to-date information. But first of all, what do we mean by management information, or MI? How would you describe it?
Well, I think it's whatever helps you run your business. It needs to work for your business. So, I mean, typically, people think in terms of accounts, so profit and loss account, balance sheet in particular. I mean, I do see a lot of businesses that just take a profit and loss account and regard that as their management information, but really that's not sufficient, because if there's problems, if there's inaccuracies, you won't know unless you're looking at the balance sheets as well. But beyond that, I think to really have proper information, you need to understand the cash flow as well, and preparing a statement which bridges the gap between profit and the change in cash is very, very important as well. Then also, I mean, it really, there's no one-size-fits-all situation. It really depends on the business. But key performance indicators, so that can be, certainly things like margins on different income streams. And again, it's quite common for businesses to have sales and purchases, and that's it, and no detail. So having some proper analysis on that is really important.
I think you picked up on the main point there about. You picked up the main point there about the fact that accounting information at the year end, it can be so out of date, isn't it? If you think about it, as you're a limited company, you've got 9 months after year end in which to file. And as we see at the moment, post-COVID, of course, Companies House have agreed now they've got another 3 months delay if you wish to have an extension before you file your accounts. So I guess, picking up on the point about historic information, it's too late to identify and take action on red flags, I guess.
Well, exactly. It needs to be up to date. Apart from anything else, if it's months out of date, you're not going to use it. You're going to just say, well, that was 3 months ago. What's the point? Things have moved on. It needs to be pretty up to date. And some businesses I've seen can produce management accounts within a week, but I would say within 3 weeks of a month end is reasonably good and reasonably up to date. But once you get beyond that, then its usefulness diminishes.
Yeah. What would you say would be included in a good management information pack then? What would be an ideal, say, package that you would put together? What would it comprise of?
Well, certainly profit and loss account comes to management information. The information needs to be relevant. So I would say the profit and loss account needs to be structured in a way that is suitable for your business and reflects your business and what's important to it. So having a whole list of expenses, you don't really need to know how much the stationery cost is in a month, particularly, unless it's going to be very significant in your business. But things like your sales on different income streams, or maybe with your main customers, margins that are coming through, that type of thing. As a business grows, maybe the costs of a particular department. So looking at it more from a functional point of view than an expense heading type point of view. Then there would need to be a balance sheet and KPIs. I'm very keen on having things like debtor days, stock days, creditor days, that sort of information, because if you know where you are with that, you can actually set targets, and you know whether things are getting better or worse. I worked in a business where I had to help improve cash flow. In that business, the debtor days were at about 60 days, and we set targets to reduce that, and we ended up reducing it to about high 40 days, and that was purely through having management information to monitor it. And when there were problems and things were going away from target, we actually went in and said, let's have a look at your processes. Let's have a look and see how you can improve things.
Yeah, so the kind of concept I use with people is when you have management accounts, you can ask that important question, why? Or why has something moved from the previous month or the previous quarter? And of course, you can't
exactly
why question with annual accounts, but it's not as immediate, is it?
It's certainly not immediate, and you need to manage for now, not looking at something from 9 months ago. It's just, to me, it seems almost pointless to do that. The other thing, actually, just going back to your previous question and why it's important having information, if you're a bank or an outside shareholder, you're going to get comfort from having up-to-date information as well. You don't want to have out-of-date information. Going back to the pack, I think it's useful to actually have a one-page summary of action points or key points of the rising action points coming from that. Just a few bullet points, really, nothing too detailed. I would also say that the information needs to be presented in a way that's readable. So I'm talking about having all this extra information that businesses might not have, but you need to have summary information and then be able to drill down. And that way, I'm a numbers person, but I can see that other people's eyes will glaze over when they have loads and loads of figures. So what you need to do is have it presented in a user-friendly way, and then be able to drill down into more detailed information.
Yeah. Is it kind of dangerous, isn't it, when you get numbers, people like yourself involved, you can end up with bar graphs and pie charts and tables. And I guess it is trying to understand sometimes that many business owners say kind of don't get the numbers. And I guess this presenting it in a way that it's usable and actionable.
Yes. And you might have on your profit and loss account, your lead sheet of your profit and loss account, you might have no more than, 10 lines, something like that. Just with the summary information. And then if something is looking a bit strange, then you have sheets behind that and you can drill down.
I like that you brought up the fact that you can have a lot more detail in a management information pack than you would have in an annual set of accounts. Because you can go down, I guess, as you mentioned, into product lines, functions, offices, departments, whatever it may be.
Exactly. it just needs to be relevant for your business.
Yeah.
There's no one size fits all, and you might need someone to and just help you with it, but it will be well worth an investment.
Yeah,
it really will be.
You mentioned about KPIs, those key performance indicators. What would you say some of the key measures you could set from management accounts? I've often been told probably no more than 3 things that you can kind of measure at any one time in order to take action. What would be the key bits of information and targets that you would extract from a good set of management information?
I think, certainly, I think margins would be very important, and margins by the main income streams. That would be very important. I think it really depends on what is important for that particular business, and there might be bits of information that are not necessarily that wouldn't necessarily appear in a standard set of accounts. So it could be, I don't know, average price per unit or something like that in the month, or something like that. You need to think about what's actually driving your business. As I said, I'm quite keen on having things like debtor days there, and particularly now, I think in this sort of environment, that those cash-related KPIs, I think are really, really important.
Yeah. For those people who are not sure about the concept of monitoring debtor days and also creditor days, give a little bit of an explanation around that and how you can use that kind of measure.
Well, yeah. So if you take your billings and just count back, so say that you've got £100,000 that's owed, just count back the number of days. So that your cumulative billing gets to £100,000, that would be your debtor days. Right. You can calculate that from a set of accounts as well. Now, clearly, debtor days actually reflects how many days it's taking for your customers to pay you. So if you have 30 days terms and it's 40 days, then that's actually pointing to the fact that people are taking longer than they should. And certainly from a business planning point of view, when you get into business planning, you need to make assumptions about your debtor days and your creditor days and your stock days and all those sort of things. So having data, hard data that you can point to say this is the way that we this is our actual debtor days is really important so you actually understand where you're going. I've looked at forecasts before in M&A situations where people just pluck numbers out of the air on these assumptions. And if you're managing cash flow and planning for the future, you need to have hard numbers to back it up, really.
Would you also advocate then having it's called an aged debtor and creditor list, where your portfolio is broken down into kind of bandings, if you like?
I think that's I think that's very important, and it does need to be looked at. For me, I think it depends on who's looking at that information and how much that information needs to be there. Someone needs to look at it. Whether it is the number one person in the company, I think it might depend on where they are and where their debtor days are compared with expectations as well. Yeah, but it definitely needs to be there, because that way you can actually go down a list and look at the balances where amounts are over terms, and then chase.
Yeah, and often when reviewing kind of finance proposals, when we're preparing packs to go to lenders, I often focus on the aged debtors, because you can see, say, a total of £100,000 owed to you. But it's always good then to drill down the numbers, because quite often you see what I call little rats and mice all down the lower end, 90-day plus, all relatively small amounts. And so the business owners tended to overlook chasing. But of course, when you add them all up, they come to quite a significant amount of money.
I mean, certainly when I do due diligence, it's something that I always look at. It's something that you would home in on. You want to know whether the debtors are collectible, and from a bank's point of view, it's all very well you saying that you're owed that money, but if you're not going to collect it, there's no value there. Yes, it's something that you do need to focus on, definitely.
So another aspect I'd like to touch upon as well, obviously management accounts, like annual accounts to a degree, is backward looking, although obviously very recent backward looking, so you can take actions fairly quickly. What about looking forward then? Would you say a good management information pack would include an element of a 3 or 6 month rolling cash flow, particularly in today's current environment? Would you include in that?
Well, when it comes to cash flow, what I would say is that particularly in this environment, that I would suggest most businesses think about having weekly rolling cash flow forecasts, probably going out 13 weeks, just receipts and payments.
Mm-hmm.
But when it comes to periodically, quarterly, you might want to prepare full cash flow forecasts, forecast balance sheets, forecast profit and loss accounts, and include that sort of information as well. At the end of the day, managing business is about looking at where you're heading. The management information there is to inform you and inform your planning, and help you identify things that need to be fixed.
Yeah.
And you can't plan if you don't know about the past and where you are.
Yeah. What would you say to the bit of again, often speak to business owners when I say, right, we need some cash flow forecast, particularly now, again, in this current environment where many businesses are applying for the coronavirus business interruption loan scheme, CBILS. The lenders are asking for 12-month cash flow forecasts. And in many cases, for the smaller businesses, it's probably the first time that they've ever sat down to put a cash flow together. What would you say would be the kind of key considerations? Because many business owners I speak to say, oh, it's pure guesswork. I haven't got a clue what's going to happen over the next couple of months. What would you say to somebody who throws that objection at you?
It is a tricky one, particularly in this environment. I won't pretend that. No one knows how long this thing's going to last. I think, firstly, having something rather than nothing provides confidence to a lender. It shows you're thinking about it. Secondly, you can, if you want, scenario plans. So you could do possibly 3 scenarios, or a best case, worst case, and most likely case, if you like. And if in this environment, any lender is going to want to see where you're heading, know that you're thinking about it, and yes, it's difficult. Any forecast, even in better times, it's never going to be. But it's almost like setting out a route map or sat nav.
Yeah. The one thing I've found when talking to
and then at some stage you might need to recalculate, redo it.
Yeah, one thing I found with businesses when talking about cash flows, the first thing I say to them is, look, have a bash of doing it yourself. I'm certainly I or your accountant could help, but I always believe that old phrase of saying it's not the destination, it's the journey that you take. And I was only speaking to a business owner a couple of days ago who the first time he's really sat down to put a cash flow together. And he actually said after a couple of days later, he said, it's probably the best exercise I've done, because it made me realize I haven't spoken to my suppliers for a while about challenging them on payment terms. I found a number of payments going out on a regular basis, and I just got used to having them going out. So kind of going through this whole exercise as well can also have a good benefit for profit as well.
Absolutely, and the same goes for management accounts. I think, as I said, I believe all businesses, maybe not one-man bands, but all businesses of the size should be preparing management accounts, and certainly as they get bigger, preparing forecasts. But I think it's a case of what you never had, you never missed. And you talk to most owners that are doing these sort of things, and they do actually appreciate the value.
Yeah, okay. Looking ahead now, say over the next 6-9 months or so, I guess you're going to say management information is even more important now as we enter a quite challenging trading period. How do you think things are going to play out over the next 6-9 months or so, particularly when we get back to, I say business as normal, everyone's saying that normal is not going to be what we believed it to be. In terms of planning ahead and use of management accounts, how do you see businesses being able to cope over the next 6-9 months?
I mean, one thing, just going back to my M&A type work, that one thing I encounter companies that have been quite cash generative. Some of them will have situations where they're having to take out loans, and their financial management is going to be a completely different ball game. Now, I think that as you look out, I couldn't, got no crystal ball, can't say that there's given an exact timeline, but it's quite common that when businesses, when we come out of recession, that businesses start to ramp up activity, and that actually requires cash to support it. You take the situation now where at some point the government support will stop, and thinking particularly of the VAT deferral that come March, April next year, that some businesses will be having to pay two VAT quarters cash.
Yeah.
The other thing is, as you mentioned, the new normal is probably not going to be the same as the old normal. I think businesses are going to actually have to be on top of their game, and they're going to have to be quite agile. If you're going to be agile and change your plans, then you need to have proper information to support it. And going back, I've probably repeated this 2 or 3 times already, but going back to the things about like margins for income streams, if one is suddenly going to take off and another one's going to fall off, you need to understand that and understand the implications for your business.
Yeah. My kind of take on it, I'm quite concerned for 2021, 2022. At the moment, business is much in survival mode, and this is where the business interruption loan scheme comes into play, obviously, just to help cover critical costs. But when we get into, say, the beginning of 2021, when hopefully everything will start settling down and we start ramping up again, see a situation where access to working capital is going to get really tight because businesses will have borrowed, not for business growth, just borrowed to keep in business, keep things ticking over. And there's not going to be any spare cash in the system, and they're going to have to resort to even more borrowed money. Now, of course, the question is, will the banks step up? And so I can see a kind of another working capital crunch coming next year as businesses start to gear up.
I think, I'd agree with that.
So, again, I guess this is where having up-to-date management information really comes into play to make sure you're in tip-top condition. We're ready to be able to tackle that problem when it comes. Great.
Well, I think there's the informational benefits in terms of managing the business, but also you've got to have that information, because if you are going to back to the bank, they're going to want that information.
Yeah, definitely. I can see from 2021 onwards, banks are going to take an even greater interest now into what business performance looks like, because businesses will be heavily leveraged. There'll be volatility in the market. You're going to have lenders crawling all over everyone. So I guess the message is, if you haven't got management systems in place to produce accounts, get them done now. Yeah, absolutely. Yeah, great. Absolutely. Yeah. It's I think it's now is the time to up your game. Particularly, I suppose, if things are quiet, then you have some time to think about it. Yeah. Excellent. Good stuff. Well, thank you very much, David, for that. It was really insightful and a good reminder about the importance of having up-to-date management information, but not only having the information, but using it proactively as well to identify red flags and to take action. So it's really grateful. Thanks very much, David. David, if people want to have a chat with you, particularly on perhaps on support on M&A activity and looking for opportunities to purchase businesses, how can people get hold of you? Right, okay. They can either email me, David at Camrose, that's CAMROSE consulting.co.uk, or they can contact me via LinkedIn, just put in David Lewis, Camrose Consulting. They can give me a call on 07836 331 677. Perfect. Excellent. Thank you very much, Rob. Really appreciate you taking the time today.
Pleasure.
Thanks very much for joining us on this Business Finance Bulletin Extra. I look forward to being in touch with you again very soon. Thanks very much, David.
Okay, cheers.